US markets pulling off yet another green week with Nasdaq up 2.18%, Dow Jones 1.17% and S&P 500 ending the week above 6,000 points at 1.49%. All of them heading towards new all-time highs. Does the market have steam enough in the engine to push to a new all-time high, and why do 80% of all investors lose money while only 20% is successful? Have you been able to enjoy the last ride I told you it would be? In my opinion, it has been. The question is, will it continue? Well, you are listening to the StockInvest.us podcast Trading Tips with Jim, where I try to give you little insights in the markets in the week ahead of us and give you some tips, tricks, help you to reduce your losses, because that is maybe one of the biggest parts of trading. And let's just start straight off with reducing losses. So what is the case scenario? Well, the obvious buys for the market, which I told you were so obvious, are no longer so obvious. That being Nasdaq totally oversold, totally overreacted downwards. The hype, the media hype, was way out of context, out of simple logic. And as you know, I bought in and I bought hard. Now I am raking in the rewards. So this is maybe the first and strongest lesson, is that you have to use the major trends. That is extremely important, because the major trends, if they are upwards, it's 10 times, maybe 100 times easier to make money than trying to do something while it's a negative trend. And yes, there will be cases like Tesla, where Tesla and Musk and Trump goes at each other, and Tesla has a really bad day. I think it was down 15% or something. As you know, I bought Tesla at the 238, 242 when it hit low some time back, and still sit in Tesla. I had to take a slight loss last week, of course, like everyone else, but I am bullish, and maybe I will tell you why in just a bit. But back to the trend. So this, try to figure out what is that major trend. Is it upwards? Is it downwards? What we'll expect, and invest accordingly. Why would you go and invest all your money if everything is pointing towards a red week? Well, at least you should wait. I like to invest in red weeks. Actually, that's how I do it. I invest in red weeks and sell in green weeks. And I use the really low of the red week. But now let's say that everything is indicating towards a big fall. Why would you buy today? Why don't you wait until it's fallen a little bit? The question is Nasdaq heading towards a fall, or will it continue upwards? Trying to answer this question, I try to look at a few things. I look at buy and sell signals across all the world, and especially, of course, Nasdaq. I also look at the chart. And if we look at the chart, we see what I said last week. There is so much support below, very little resistance above. Everything pushes towards the upper end. Market or a chart, like in this case, should handle really bad news. Fine. I mean, yeah, you will have a fall, but it will not be as drastic because of all the support below. Support below just means that there is a lot of people who have invested at lower amounts, and they have a higher tolerance of risk than people that just invested at current levels. So if you start to buy today, you will have less risk tolerance than anyone who bought at cheaper levels, like me, because we have a lot of profit. And we can be a little bit more patient. We are not sitting in any positions that can flip us out. And that is lesson number 2. Don't spend money you cannot lose, because markets go up and down. As I said, look at Tesla. What happened to Tesla last week? If you bought at 330, thought it was a super buy, you was up at 347 celebrating, just to wake up seeing Tesla being hammered down to 280, I think, before it was turning up again. I did sleep very well, no problem with that. things happen, and I'm pretty sure, as I said, Tesla will continue upwards. But you cannot be in this sort of position. That's a guaranteed way of losing money, especially if there is a risk for a huge fall. In my opinion, the chart shows that there is so much support below that we have to have some really bad geopolitical issues forcing these things, because the tariffs, they are slowly getting to where they were supposed to be, into negotiations, actual trade. And I read, for instance, that Germany just approved to sell US cars without tariff, and US will do the same with German cars. So finally, the Germans can enjoy a real American car without being taxed to heaven, like, for instance, in Norway, if you want to buy an American car. So these things are slowly solving. The other thing is that huge scares that all of this will cause a mayhem of inflation. Well, I was the first to invite or tell you that the inflation would come 5 years ago fast, but just go back to my podcast. I tell you what would happen, or I told you what would happen with interest rates. I told you what would happen with inflation. I was so far right about all of it. And I say, or my strong opinion is, that inflation will continue downwards. And I gave you arguments and reasons for this, especially then energy being the main issue. It's so much nicer to fill gasoline by the pump now, and anything that's energy related is having benefits of low energy cost. But this week on Wednesday you will have CPI numbers, and it's expected that the inflation will increase by 0.3% for May and 2.5% year over year. Still above the 2% target for Fed, where they want to be. Now, these numbers, they can, of course, we have heard, or at least if you follow the financial news, it's been expected now, I think for 2 months, everyone has been expected the tariffs to hit really hard, inflation to go up. They've been messing about it week after week. Didn't happen last week. Really good numbers came in, and we will see what will happen. My personal opinion is that maybe this will be the first time that we'll see some effect of the inflation numbers, but in general I do not expect very much from Wednesday. So we sit in a situation where the charts are showing that it's a high chance that Nasdaq will push upwards. Trying to confirm this, because again we are trying to figure out, should I keep my high investments? Should I invest? Where are we now? Where are the big trends? And I will get back to a few stock tips as well, so stay patient. Looking at buy and sell signals, we can tell that 40% of all stocks are giving buy signals across all the stocks that we analyze, and that is some 45,000, I think, is qualified for this signal structure. 40 is up from 31 last week. We are starting to get very high, and looking at National Stock Exchange Index at 54, we have Frankfurt at 46, Norway 43, London 41. They are all starting to get to the upper end, where you can expect a correction down. When these numbers was very low, I told you just buy, because it's an obvious buying situation. Nasdaq is not so high at all. It's only 22%. There is tons and tons of companies at Nasdaq that still have huge potential, and New York Stock Exchange is following at 36. Tokyo 34, and Shenzhen, China 36. These numbers are not scary high. When they get up to 50, that is when I absolutely sell. When they are this high, there is a high chance that they actually will boost the markets, because they show it's a strong optimism in the market, and we know that the optimism sometimes gets the best of everyone, over investing. FOMO, fear of missing out, and that is usually the case where you also lose money, like you are getting into stocks long after they've been up way too long, just to be in it for a few days and we head for a downturn. Summing it up into something everyone can understand, the chart says that there is a higher chance for an upturn than a downturn. The buy and the sell signals, they say there is a fair chance that we will get into a frantic, way too optimistic market, and we know that we can then get into overbought and have a rally in overbought. And my prediction was a long time ago that we easily will see 20,000. My bet is that Nasdaq will do exactly that. Nasdaq will push into a rally. We can easily go to 22,000 before we head into a cool off period. We are not in the top of the trend. We are not in the places. There is no resistance above. Things can easily just go very, very fast upwards. So to sum that up, I will stay invested in the market with the same exposure that I have. I'm still not ready to reduce a little bit. You know, if you follow this podcast, when market was really low, I told you, well, now I will sell all my gold, which I doubled in money. I will sell it. I will invest into market because it's too frantic. It's too out of control. All this media hype with the tariffs was totally out of context, everything. I put the money into market and now I'm so happy about it. Will I be correct? Will it continue a little bit more? I stay on the higher end of my investments. And before moving on, let's just try to conclude this, make some sense of it. What I'm trying to say is that try to understand what expect you moving forward, invest accordingly. So we are in a situation where I just said that I think market will push upwards. The signal says somewhat the same, the chart says somewhat the same. So how do we find the stocks? Well, I told you that Nasdaq has only 22% buy signals. To me, that is an opportunity. If you look at New York Stock Exchange, 36, still low, but no, if let's say that we were investing in National Stock Exchange of India, most of the stocks are in the overbought territory. There is not much to go. So for me, that indicates that Nasdaq is a good place maybe to find some stocks. Last week, I gave you 5 stocks from Nasdaq, which I thought could have an upside based on signals. We changed the strategy a little bit last week. The results are in. I told you that I thought Mercado Libre, the retail industry, could go up. It was at $2,563, ending the week at $2,482, lost 3%. Then I said that Duolingo is also a stock that shows all the signs of continued upwards, but Duolingo lost 1.3%. Luckily, the 3 others, they went up because I said Netflix is also showing buy signals, and next Netflix, if you bought Netflix on Monday and sold on a Friday, you would have made 3.35% or more. Applovin in the technology sector was another stock I said pushed buy signals, and if you bought Applovin on Monday, you could have made 6.52% over the week. It started the week at $392, ended the week at almost $418. And then there was Meta. I told you that Meta is also on the list of stocks with good buy signals. And if you had bought Meta on Monday, $644.39, you would have invested into the single stock. And you could have sold that same single stock for $697.71, up 8.27% over the week. So 3 out of 5, I'm happy about that. It was a green week, so you should expect that. But very happy with Applovin and Meta, which returned really strong investments. And that brings me to another lesson. I know everyone is dreaming about making 100% during a week, but making something like 5% over a week is amazing. Yes, dream big, aim big, do all of that, but put in some realism, because if you try to gain 100% means that you have to go insane high on risk, and that is usually how you lose money, especially if you miss the first part I told you, to understand where the markets are. I have 5 more stocks for you this week, which is giving buy signals. Hopefully they will do somewhat good as well. If you haven't subscribed, remember to subscribe. And if you like what you heard so far, please like. That's the way to grow. Otherwise, as usual, I have to consider how long I can do it. 5 years, actually 6 years now, I've been giving you these advices. You follow my journey over these years. I've been able to make quite nice money. I expect the future to be even better, but we will see. 5 stocks giving buy signals. T-Mobile, ticker is TMUS, is giving buy signal. Current price is around $245. Then there is O'Reilly Automotive, which is ORLY. The ticker, very expensive one, 1,377, but don't let you be fooled by these things. Meta, as I said, was $644. Sounds very, very expensive. but don't let that be a reason not to invest. And these days you can do fractional investing, meaning that you can buy less than a share if you want. So it's absolutely no excuses. And if you had bought Meta last week, like I said, gave good buy signals, you would have made 8.27%. Then there is Kforce. This is a much smaller company. It's a company that works with employment. KFRC, not sure if it's the best one. It's a little on the risky side. Only values around 800 million. It's a little bit too low, I think, but still giving buy signals, and we need one of these that can go really fast. $41 is the price around now. Then there is Electronic Arts, which been in and out of these for many times. It's again flashing buy signals from moving average 35. Gave the signals on Friday. Current price is around $149. And this Comcast Corporation in the telecom industry, where the ticker is CMCSA, Comcast, $34 is the price for the share now, also flashing buy signals. We will follow these 5 stocks. I will list them on the YouTube video. You will see them there. Maybe if I remember, I'll put them in the description as well. But we are not totally finished with the week ahead of us, because there will be a few quarter earnings, but it's absolutely last of them. The most interesting one will be GameStop, the meme stock of all meme stocks. And the movie GameStop is actually absolutely nice movie, which I can recommend for everyone to see. It gives you a little insight to psychology, trading, and a lot of other things. Indeed, a good movie, a good portrait of the person himself. Monday will be cases expected to swing 3.2% based on the quarter results. Actually, the earnings are expected to go down by 18%. So 3.2% plus minus if you are able to bet on the right end. GME, and if you are able to bet where GME, if it will go up on the quarter results or down on the quarter results, the expectations is that it will produce a profitable quarter. Last quarter it lost 12 cents per share. This one is expected to be up at 0.8 or 8 cents. So a drastic change for GME. If it happens, it's expected to increase by 7.76%. But it's plus minus, so it's expected to swing. But if you can do the right bet in GME, that will maybe give you a huge loss or profit. You can put in stop loss, etc. to try and reduce your losses, and you should do that. Wednesday will be Oracle and Victoria's Secrets. Victoria's Secrets will give you a little insights into how the high-end money is moving. And I read some warnings that some of the cheaper shops now see that high-income people are starting to go at lower-end stores. And they say it's a warning sign for economy. Not sure about that, but the inflation that we had over the last 4 years put a toll on everyone. We know that credit card delinquency is the highest it's ever been. We know that everyone is stressed into a situation, but inflation is going down, egg prices is going down, fuel is going down, everything is going down. I'm not sure it will stay, but on Wednesday we'll know how people who love Victoria's Secret underwears are doing. The expectations is that they actually would lose or they will go down by 25% on the earnings to 9 cents per share from 12 formerly. Oracle only 2.58% swing, not much expected from Oracle at all. Stay in line with the earnings. It will be Adobe as well, and Adobe on Thursday is expected to swing by 3.31%. Also here the expectations is that the earnings will be reduced from $4.1 to $3.63. Adobe will give insights to a lot of the AI things, so it's absolutely something that you should follow. Other news for the week before we go to the $1,000 challenge. On Thursday there will be jobless numbers. Last week they came in stronger than expected. We will have producer price index numbers on Thursday. It's more or less the inflation for the producers expected to be 0.3 for May and 2.4 year over year. If you want a little news earlier, you can already tomorrow on Tuesday have small business optimism survey from Michigan, I believe it is, and it's expected to show a slight decrease in the optimism among small business. I think actually we can get some surprises. in terms of these things. We see some changes in behavior, which is on the better part. Friday will be consumer sentiment. That is also the same thing. Tells a little bit what consumer thinks about the future. You have to remember that we are bombarded over the mainstream media with negative news. Everything is so negative, while the reality is totally different. The economy is beating the market week after week, and people in general see that prices are going down. So there is a huge discrepancy. I'm not sure the sentiment will be as bad as they think. Anyway, we will know. This was almost it. We have one thing left, which is the $1,000 challenge, where I try to grow $1,000 as fast as I can. But before that, I would just want to summarize a little bit, because I started to say early in the podcast that 80% of you are losing money. My best hope, my best wishes, all these years I've been driven by this hope idea that I can help at least some of you to reduce your losses, increase your gains, which is the slogan, and also for Stock Invest, where we try to do these things, provide you with tools that can help you make a good decision. If you don't want to be in that category, take a breather, rechange your thinking, go more, not so much towards trading, but more towards investing. Think a little bit more long term. I know I've been there so many times myself over these 30 some years of trading, how nice it is to trade, but it requires such a focus, and you have to have very, very good tools, and you have to be dead on. You cannot miss a beat, because that is absolutely where only the best will thrive, unless you have some luck. You will have much more chance if you invest, and you invest a little bit smart. You reduce your risk, just like I told you. Look what is expected from the markets ahead, invest accordingly. It's such a good tip. The second thing is make sure that you have a portfolio, not only bet in one stock. Unless you have a small amount of money, then yes, by all means go into one stock. But if you have a little something to invest, make it into a portfolio. Don't sit in the same sectors for all of them, sectors and industries for all of them. Try to be a little diversified. You can have a risky stock in your portfolio, but make it to something you can tolerate. Personally, I never have more than, at some points I bought 20% high risk stocks when the market is really, really low and undervalued in my opinion. I increase my high risk stocks quite drastically, but in general I can be as low as 5% with high risk. Now I'm probably around somewhere around 13%, meaning that I'm more into the bigger stocks, because when markets go the wrong way, and that may very well happen, can happen this week, you never know. If you sit in the major stocks, you don't lose as much as if you sit in smaller, high risk stocks, which can lose easily 5% every single day for 2 weeks in a row, bringing you down to levels you cannot imagine, and getting up from these levels is so hard. Because if your stock loses 50%, remember, it has to double to get back to where you were. That is how percentage work. $1,000 challenge is very easy. I'm in NEO. I stay in NEO. NEO put up quarter results last week, and they were less than expected, worse than expected, but not too worse. Two good things happened. First off, I didn't like that the quarter results was not according to estimates, of course, but two good things happened. China, the official China is saying to its EV companies, because most of the huge ones are in China, that they do not like the bidding war, that they are selling cars under fair price value, losing money to gain market shares. That's how you gain market shares. That's how Tesla did it in the early days. They got subsidies from the government. They put out cars super cheap, built up a super big market space, and now it's a multi-billion company, and raking in huge. Tesla is hugely profitable, by the way. But NEO is still not profitable. They say they will manage by Q4 this year to go in profit. I really like, and I think it went a little under the radar, China says, and it's especially BYD, which is being very, very aggressive. They have a lot of money in the bank and selling cars under cost value to just grab the huge market share. You have to remember after parts and all of this and becoming a major brand. Official China said that they don't like this practice and urges to get back to remove this strategy and get back to more fair competition. Strange thing from China to say that subsidize everything, but I'm speaking internally. China is a huge market. I think it went a little under the radar. Now NIO ended the week at 363. I bought it into the $1,000 challenge at $5.1. So we are on a huge loss, 28.82% loss. But the $1,000 challenge sit at $2,681.53 after a lot of successful trades before this one. And finally, I start to see the potential upturn for NIO coming. And that means that I think NIO at 336 is a very good case. Personally, I'm way too much invested into NIO. We will see how it will play off. It's one of my high-risk stocks, by the way. I believe that makes for the end of the podcast. I hope you enjoyed it. I hope if you're driving or whatever that you had a good few minutes listening to the podcast. More than anything, I hope that you learned a few things, or at least I maybe spurred you to think a bit differently. Above all of that, like I say every single week, I hope that your portfolio will be much greener by the end of the week. And hopefully I will see you next week, and I will be back with next week's episode. Until then, just have a super time. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.